We're analyzing KeyCorp, stock ticker KEY, Key, to see if its market price is a fair value. We're using the 10 Towers analysis to look at the most telling banking financial metrics before estimating an intrinsic value for KeyCorp. Then, we're giving a final rating to the business. There will be 2 key bonus metrics along the way that just might be the tipping point when analyzing KeyCorp for your portfolio. Before we get into these valuable metrics, let's understand KeyCorp's stock performance. Like other regional banks, KeyCorp has seen their stock price dramatically decline in the past couple of months. At the time of recording, KeyCorp trades for $12.31 per share. Their stock price is down 41% in the last year. Similar to other regional banks, their stock price has been crushed in the spring of 2023. In the last 5 years, KeyCorp stock price is down 39% overall. In the last 10 years, their stock price is only up 15%. That's compounding at a rate of 1.5% annually. Going back prior to the global financial crisis, over the last 18 years, KeyCorp stock price is down nearly 64%. The company trades well below where it did prior to the global financial crisis. KeyCorp has only about doubled since their lows in July of 2009. One bright spot, KeyCorp does pay out dividends. Right now, KeyCorp has a huge 6.6% dividend yield. That's one of the higher dividend yields even for banks. KeyCorp's average dividend yield throughout this time would be in addition to these compounded annual returns in their stock price. KeyCorp trades $3 above their 52-week low. The company is down $10 from their 52-week high. 2.5% of their shares are sold short. KeyCorp has an $11.4 billion market cap. But why should we be paying close attention to KeyCorp? With all the headlines surrounding regional banks, we want to cut through the noise and look at the company's fundamentals to get an objective perspective of the business. Learning more about KeyCorp, with assets of over $170 billion, Ohio-based KeyCorp's bank footprint spans 16 states. But it's predominantly concentrated in its 2 largest markets, Ohio and New York. KeyCorp is primarily focused on serving middle-market commercial clients through a hybrid community corporate bank model. Starting with metric number 1, we want their average 5-year PE to be below 12.5. That's about the average PE for the banking sector as a whole. If this is below this could potentially mean KeyCorp is trading for a reasonable value. Currently, KeyCorp is trading at 6.5 times earnings. In the last 5 years, they had a low of 5 times earnings, and they've traded as high as 17.5 times earnings. Averaged out, KeyCorp is trading at just about a PE of 11. This is just below the metric we're looking for, meaning this is a check starting things off on metric number 1 for KeyCorp. Metric number 2, we want their average return on equity in the last 5 years to be above 9%. If this is the case, the company will earn above average returns. Some banks run into trouble by not having sufficient returns on equity, which can hurt them over the long run, especially if they're growing assets. While KeyCorp's return on equity has fluctuated throughout this time frame, the company averages about an 11.5% return on equity in the last 5 years. This is a couple percentage points above the metric we're looking for, so this is a check on metric number 2. Metric number 3, here we're looking for revenue growth in the last 5 years. KeyCorp has modestly grown their revenues from nearly $6.2 billion in their fiscal 2018 to about $6.7 billion in fiscal 2022. This is another check here on metric number 3. Metric number 4, we're looking for net income growth in the last 5 years. KeyCorp has grown their net income slightly from just under $1.9 billion in 2018 to just over $1.9 billion in 2022. This is a check here on metric number 4 as well. We are a perfect 4 for 4 for KeyCorp so far. Averaged out in their last 5 years, KeyCorp earns about $1.9 billion in an average year. We're putting that number in the bank for later when we'll come back to it in a later metric. Metric number 5, we're looking for deposit growth over the last 5 years. KeyCorp has pretty significantly grown their deposits from $107 billion in 2018 to over $142 billion in 2022. The company's deposits are down from their peak in 2021. With the regional bank crisis recently, this total deposit number could be coming down from where it was at the end of their fiscal year, although it's still likely strong growth during this time. This is another check on metric number 5. We're still perfect. Metric number 6, we're looking for decreasing shares outstanding in the last 5 years. A well-run bank is going to earn more money than it knows what to do with. They can get themselves into trouble if they're not using their earnings and returning that capital to shareholders. We also want to make sure a business isn't excessively diluting shareholders. Thankfully, this is not the case for KeyCorp. KeyCorp has bought back 12% of their shares in the last 5 years. They've repurchased more than a tenth of their company, and this is likely a strong sign for long-term shareholders in the business, because when you purchase a share of stock, stock, what you're really buying is a fractional ownership percentage in that underlying company. When that business buys back shares by decreasing the number that you have outstanding, they're increasing your ownership percentage in the business, which will increase the percentage of the business's profits without you having to pay a dime. With another check on metric number 6, we are perfect through our first 6 metrics. Let's see if KeyCorp can keep this going. Metric number 7, we want their interest expense on deposits divided by their total deposits to be either stable or decreasing. During this time, not only has KeyCorp grown their deposits, their interest expense has actually gone down. KeyCorp is paying out less interest on a larger deposit base, so this percentage has gone down. Another solid check here on metric number 7. Metric number 8, we're looking for non-interest expenses as a percentage of total deposits to be stable or decreasing. This is a more conservative way of looking at a bank's efficiency ratio, which is one of the key fundamental financial metrics for a bank. KeyCorp's non-interest expenses were 3.7% of their total deposits in their fiscal 2018, and in their fiscal 2022, that number declined to just about 3% of their total deposits. KeyCorp has been operating more efficiently over this time as they've grown their deposits faster than their non-interest expenses. This is another check here on metric number 8. Perfection is still in the books for KeyCorp. Metric number 5 is a very important safety metric for a bank. We want their institutional deposits as a percentage of their total deposits to be as close to zero as possible. Simply put, this is because institutional deposits are easier to leave a bank than retail funded deposits, especially with KeyCorp appealing to middle market companies. This is very important for the business. Institutional deposits made up 7.4% of KeyCorp's deposit base in 2018. That's declined to just about 1.2% of total deposits in their fiscal 2022. The company is less reliant on institutional deposits today than they were 5 years ago. Another check here on metric number 9. We're still 9 for 9. Can we go a perfect 10 for 10 on KeyCorp? Metric number 10, we want KeyCorp's average market cap in the last 5 years and their current market cap to be below their average 5-year net income multiplied by 10. If this is the case, this may provide a starting point for a reasonable fair intrinsic value of KeyCorp. KeyCorp over this time has fluctuated from a market cap of as low as about $8 billion to as high as about $25 billion. Averaged out, KeyCorp is around a $17.7 billion market cap, and currently they have about an $11.4 billion market cap. We learned way back in metric number 4 that KeyCorp earns about $1.9 billion in an average year. When we multiply their average earnings by 10, that comes out to $19 billion, which is higher than both their current market cap and their average market cap during this time. This means that KeyCorp has done it. KeyCorp is a perfect 10 for 10 on our 10 Towers banking analysis. They're the first bank to have done this so far, but there's still one vital piece missing. This missing piece could be the make or break factor for KeyCorp. In fact, this was one of the key reasons for the failure of Silicon Valley Bank, so you're not going to want to miss this. For this key bonus metric, we want their median return on equity in the last 10 years to be above the 10-year CAGR growth in their earning assets. It's key to want a bank to earn above average returns on equity. A well-run bank ideally needs to earn returns on equity that allows their returns to be above how quickly they're growing their balance sheet. Unfortunately, this is our only blemish of the day on KeyCorp. This is not the case for the business, as their earnings assets have grown at a 9.1 10-year CAGR, and their median returns on equity are about 8.7% in the last 10 years. Even though this is the only place KeyCorp is off in our analysis, this is a very big one. They're not off by a ton, and they're not nearly off by as much as a bank like Silicon Valley Bank was, but this again is a very key safety metric for banks. We can also see that during the global financial crisis, KeyCorp was hit incredibly hard. They had very negative returns on equity, and again, their stock price has not rebounded to where it was before the global financial crisis. Now in our second bonus metric, we're analyzing KeyCorp's dividend profile. KeyCorp pays out that huge 6.6% dividend yield currently. This is well above the dividend yield from an average bank. However, people make mistakes all the time by blindly chasing dividends. It's important to stop and look at the underlying fundamentals of a company to see if they're able to support their dividends. KeyCorp has supported their dividends with their earnings in all of the last 5 years. Earnings are really the key here for a bank as opposed to free cash flow like some other types of businesses. KeyCorp has not only grown their dividends per share in all 5 of these years, they've also grown their earnings per share over this time as well. It looks like KeyCorp, despite some of the recent woes in banking, has supported a growing dividend, and again, more recently, they're earning above average returns as well. So these growing dividends and their share buybacks have been somewhat of a release valve for the excess capital in the business. This could be improving on their faster growth in their earning assets that we just looked at. A bank's qualitative factors have always been important. Suddenly, with banks being on everyone's radar, they're even more so. Starting with the key points supporting a potential long thesis for KeyCorp. Number one, KeyCorp's investment banking and capital markets offerings allow the bank to win business from corporate clients that seek more robust offerings but are too small to attract attention from bulge bracket firms. Number two, the bank's extra growth from its Laurel Road initiatives and more growth for its capital markets segment should continue for the foreseeable future, giving the bank unique growth drivers compared with peers. Number three, a strong economy and higher rates are all positives for the banking sector and could propel revenue and profitability higher for KeyCorp. Then for the key points supporting a potential short thesis. Number one, corporate and investment banking remain intensely competitive, and KeyCorp may not have the scale to compete with the largest regionals or money center banks. Further, it could take some time for these revenue streams to return to full capacity. Number two, KeyCorp has an odd branch footprint that may be difficult to truly optimize, leading to structurally lower efficiency and less revenue synergies compared with peers. Number three, no one knows what deposit outflows will look like for the banking sector or how high deposit costs will go. There could be some negative surprises left for the banks. There you have it for a balanced perspective around the qualitative factors of KeyCorp. Now it's time for a rating of the business. In analyzing KeyCorp, stock ticker KEY, we learned the business trades for a reasonable PE, they earn above average returns on equity, they've grown their revenues and net incomes in the last 5 years, they've also grown their deposits, while at the same time buying back 12% of their shares. KeyCorp has gotten more efficient on a number of key metrics, they've also reduced their reliance on institutional funding, and it looks like the business could be potentially trading attractive to where it has been in the last 5 years based off their average earnings potential. KeyCorp also has a huge dividend yield that's been supported by their earnings in all 5 of these years, and it's been growing over this time. The only true blemish in looking at KeyCorp's fundamentals, because the companies grew their earning assets at a rate that was faster than their median return on equity in the last 10 years. That's not something that you would casually want to overlook. Please keep in mind this analysis is not financial advice. It is not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with your financial and investment advisors. With all of the factors of our analysis in mind, KeyCorp looks like an exceptional candidate for further research. Banks can be tough to analyze. KeyCorp looks like it's a bank worth diving into and learning more. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more bank analysis videos, comment down below what business you want me to take a look at next time, bank or otherwise. Thank you for learning about KeyCorp with me, and have a great day.